Welcome to this special edition of 7-Day Yield. I'm Lydia Moorish. The election aside, the financial services industry sees a combination of headwinds and tailwinds. 7-Day Yield's Mitch Rochelle asked PwC's financial services leader, John Stadtler, how the election results may impact which direction the winds are blowing.
John, we're weeks after the election, and obviously there's a lot of uncertainty, but how might the financial services, and I know it's a hard question to answer, but how might the financial services industry be impacted by some of the changes that are in front of us?
Four things are clear. One is uncertainty. So new administration, not a lot of specificity in the platform, and that uncertainty is going to drive a lot of focus. So what banks are kind of looking at. Second is tax policy. They did actually have a fair bit around tax policy, and so I think that's what you're seeing kind of with the market being buoyed by the fact that capital gains rates are going to stay, corporate rates are going to come down. Infrastructure spending is something that a lot of people are focusing on. The administration has clearly said they're going to promote private investment in infrastructure as well as government. But the biggest is regulation. And so I know you've got a number of topics kind of on the regulation point, but I think there's a clear view that regulation will be eased, and that'll be pulling back a little bit of how the rules are being enforced. So I think those are kind of the things that we see.
Playing devil's advocate a little bit on regulation, I mean, I'm old enough to remember the savings and loan crisis, and that came from deregulation.
Yes.
So is there the concern out there on some people's part that if we go swing the pendulum too far in the opposite direction from a deregulatory perspective, we could have Wild West type activity?
I don't think there's any risk of deregulation. I think the pendulum had swung to such an extent. This should be getting banks back into the growth mode, and they have all been focused on somewhat of this internal governance, appropriate post-financial crisis, but now I think they can get back to that growth model.
The regulation of our banks made us a little less competitive globally, and by easing some of those regulations, we'll be able to compete on the global scales more effectively?
I do think coming out of the election, Brexit, we have an election in France and Germany, there's a lot of change happening. And I think while there's a view that we're pulling back and focusing on the U.S., I do think with a lot of this change around the global environment, some of the largest banks are really going to look at their overall footprint and pare down unprofitable businesses, grow in areas that are profitable.
Not to end on a negative note, but if deregulation or even slight deregulation becomes a tailwind for the U.S. financial services industry, what are some of the headwinds that are out there, election aside, that we should be mindful of?
I mentioned technology, and disruptors are going to be significant. I think further and further apart have become banks and asset managers from their end customers. And there is a trend of bringing technology in that customer interface, which may end up resulting in the profit going for the person who has the end contact as opposed to the traditional financial services institution. Technologies like blockchain may be something where the custody banks need to really move quickly, or others may disintermediate them. So I think over the next 5 years, and it may even be sooner than that, some of our financial services institutions could be disrupted. And what's really driving jobs in the U.S. Is that mid-tier bank. Those are certainly subject to whether it's M&A or others kind of taking market share.